Hey, landscape business owners, it's Carla from Cycle CPA, your landscaping accountant, here to talk about how you pay yourself in an S corporation. Or a lot of clients want to switch over to an S corporation because they're a sole proprietorship right now, which is like most common, is that you have a single member LLC, just one owner, and then you open up the LLC, and by default you're taxed as a sole proprietorship even if you're a single member LLC. But then as you grow and your business grows, you want to make that move to switch over to an S corporation for several different reasons, and one of the reasons is being able to run payroll for yourself. So whether you're looking to switch over to an S corp or you're an S corp already and don't know how to go about paying yourself and what the implications on taxes and what that looks like, please stay tuned because I'm going to run through the numbers and explain step by step on how that looks. So let's get started. Okay, great. So we're going to jump in and see what the differences are if you were to have earnings in a sole proprietorship versus paying yourself through an S corporation, and what are the tax implications on that. So the first thing we need to know is what are self-employment taxes, what you see here. So self-employment taxes consist of 1, Social Security, 2, Medicare taxes. And we can see that those two add up to 7.65. So the employee pays their portion of the self-employment taxes every time they get paid payroll. They pay 7.65% of it. And then the employer also has to pay their taxes on behalf of the business, which is 7.65. So if you're a business owner and you end up paying both the employee share and the employer share, so if you add these two up, so it adds up to 15.3% that you're paying in self-employment taxes. Next, I want to talk about, okay, what is a reasonable salary in an S corporation? So the IRS requires that distributions and other payments by an S corporation to a corporate officer must be treated as wages to the extent that the amounts are reasonable compensation for services rendered to the corporation. So shareholders of the S corporation must be paid a salary as if they were an employee of the corporation. So yes, you are a shareholder, but also an employee. So you have to run payroll for yourself, a reasonable salary. So depending on the revenue that business is generating and the net income of that business, what it's generating, that's how we can figure out what is reasonable salary for that specific shareholder in that specific business. And that's something that we help our clients do, is determine, okay, what is going to be your salary in your business. So here I have some numbers that we run through. So let's say you're taxed as a sole proprietorship and your earnings and your net income, right? That's $100,000. That's how much in earnings that you make. Again, you pay both the business owner, employee, and employer portion of self-employment taxes. So on this $100,000 earnings, you'll end up paying 15.3%. Some quick math there, you'll end up paying $15,300 in self-employment taxes. Now let's say you elect to be taxed as an S corporation. And in an S corporation, you would have run a reasonable salary of $70,000 through payroll. The S corporation would have paid 7.65% of the self-employment tax, like we had mentioned, which would end up being $5,355. You would have ended up paying the same $5,355 for a total payment for self-employment taxes of $10,810. So here you end up paying less self-employment taxes than over here as a sole proprietorship. The difference between $15,300 and $10,810 is a total tax savings for you of $4,290. Now you're probably thinking, why is my reasonable salary only $70,000 if I've had earnings of $100,000 over here? That's because as corporations get to have something called owner's distributions. So the S corporation distributes money to you, and so like I said, you only need to have a reasonable salary. So from those $100,000 earnings, only $70,000 has to be run through payroll, and the rest of the $30,000 gets distributed to you as shareholders' distributions. So that's how you save a lot of money on taxes, by electing to be taxed as an S corporation and then having a reasonable salary as a shareholder of that S corporation. And we advise our clients, okay, this should be your salary. This is how much owner distributions you can have during the year, if any, to help plan so that your tax liability at the end of the year is less, right? So again, this is the comparison between sole proprietorship taxation and S corporation taxation. So if you guys have any questions about this, feel free to reach out to me at carlap@cyclecpa.com, or shoot me a message on Facebook, Landscaping Accountant group. But yeah, thank you so much, and I hope that this shed some light on S corporation reasonable salary for you all. Thank you. Bye.